Bitcoin has surged to an unprecedented price of $72,507. This new all-time high marks a watershed moment for the cryptocurrency. It signifies growing confidence and adoption. Investors are increasingly viewing Bitcoin as a viable asset class. This surge is not just a blip on the radar, it is the culmination of several factors. These include increased institutional interest and growing concerns about inflation. The upcoming US election also plays a role in market sentiment. Bitcoin's journey has been marked by volatility. However, this recent milestone indicates a shift. It suggests a maturing market and a growing acceptance of digital assets. The question now is, what comes next? To understand Bitcoin's future, we must examine its past. By delving into its historical trends and market dynamics, we can gain valuable insights into its potential trajectory. Bitcoin emerged in 2009, marking the beginning of a new era in digital finance. It was created by an anonymous person or group known as Satoshi Nakamoto, whose identity remains one of the greatest mysteries in the tech world. Bitcoin was designed as a decentralized digital currency, operating on a peer-to-peer network without the need for intermediaries. It operates independently of central banks and governments, offering a new level of financial autonomy to its users. Bitcoin's early years were marked by skepticism and volatility, with many doubting its viability as a currency. However, it gradually gained traction as more people began to see its potential and started adopting it. Its decentralized nature and limited supply appealed to those seeking an alternative to traditional finance, especially during times of economic uncertainty. Key events, like the Cyprus financial crisis in 2013, highlighted Bitcoin's potential as a safe haven asset, driving more interest and investment. Over the years, Bitcoin has witnessed several boom and bust cycles, reflecting its highly speculative nature. These cycles are often driven by speculation, regulatory news, and technological advancements, which can significantly impact its price and adoption. Understanding these historical trends is crucial for navigating the volatile world of Bitcoin, helping investors make informed decisions in this ever-evolving market. The upcoming US election adds another layer of complexity to Bitcoin's trajectory, as political decisions can significantly influence the financial landscape. Former President Donald Trump's stance on cryptocurrencies has been a topic of much discussion, often sparking debates among both supporters and critics. While not explicitly endorsing Bitcoin, Trump has expressed skepticism towards cryptocurrencies in the past, calling them volatile and unregulated. However, some of Trump's policies, such as his focus on deregulation and economic nationalism, could be interpreted as indirectly beneficial to the crypto industry, potentially fostering innovation and growth. A Trump presidency might lead to a more favorable regulatory environment for cryptocurrencies in the US, potentially driving further adoption and investment in the sector. On the other hand, a Biden administration might take a more cautious approach towards cryptocurrencies, emphasizing the need for oversight and regulation. This could involve stricter regulations and a greater emphasis on consumer protection, aiming to safeguard investors and maintain market stability. The outcome of the election will likely have significant implications for the future of Bitcoin and the broader cryptocurrency market in the United States, shaping the regulatory framework and influencing investor confidence. One of the key narratives driving Bitcoin's surge is its potential as an inflation hedge. Global economies are grappling with unprecedented levels of government spending and quantitative easing. This has led to concerns about inflation eroding the purchasing power of fiat currencies. Bitcoin, with its fixed supply of 21 million coins, is often seen as a hedge against inflation. Unlike fiat currencies, which can be printed endlessly, Bitcoin's scarcity is mathematically guaranteed. This makes it attractive to investors seeking to preserve their wealth in an uncertain economic climate. While Bitcoin's track record as an inflation hedge is still relatively short, its decentralized nature and limited supply make it a compelling option for those concerned about the debasement of traditional currencies. Section 5. The Institutional Wave. How Big Money is Shaping Bitcoin's Future. Bitcoin is no longer a fringe asset confined to tech enthusiasts and early adopters. Institutional investors, including hedge funds, asset managers, and even publicly traded companies, are increasingly adding Bitcoin to their portfolios. This institutional adoption is a major catalyst for Bitcoin's price surge. Companies like MicroStrategy and Square have made headlines with their substantial Bitcoin purchases. The launch of Bitcoin ETFs has further lowered the barriers to entry for institutional investors. This influx of institutional capital brings legitimacy and liquidity to the Bitcoin market. It also signals a growing acceptance of Bitcoin as a mainstream asset class. As more institutions recognize Bitcoin's potential, the price is likely to continue its upward trajectory. Section 6. Beyond Bitcoin. Exploring the diverse landscape of cryptocurrencies. While Bitcoin dominates the cryptocurrency market, it's not alone. Thousands of altcoins, or alternative cryptocurrencies, have emerged, each with its own unique features and use cases. Ethereum, the second largest cryptocurrency by market capitalization, has gained significant traction for its smart contract functionality and its role in decentralized finance, or DeFi. Other notable altcoins include Binance Coin, Cardano, and XRP, each catering to specific niches within the cryptocurrency ecosystem. The performance of altcoins is often correlated with Bitcoin's price movements. However, certain altcoins can outperform Bitcoin during specific market cycles, driven by factors such as technological advancements, partnerships, and community sentiment. Section 7. Gazing into the crystal ball. Bitcoin price predictions for 2025. Predicting Bitcoin's price is notoriously difficult, given its history of wild price swings and unpredictable market behavior. The market is volatile, influenced by a multitude of factors, ranging from regulatory developments to technological advancements and even macroeconomic trends. However, we can analyze historical trends, market sentiment, and expert opinions to make informed speculations. By looking at past performance and current market conditions, we can attempt to forecast future movements. Some analysts believe Bitcoin could reach $250,000 or even $500,000 by 2025, driven by factors like increased institutional adoption, growing mainstream awareness, and the potential for Bitcoin to act as a global reserve currency. They argue that as more institutions and individuals recognize Bitcoin's value, its price will continue to rise. Others are more cautious, warning of potential bubbles and regulatory hurdles. They highlight the risks associated with rapid price increases and the possibility of market corrections. These cautious analysts predict a more gradual price appreciation, with Bitcoin potentially reaching $100,000 to $200,000 by 2025. They believe that while growth is likely, it will be more measured and sustainable. It's essential to remember that these are just predictions. No one can say for certain what the future holds for Bitcoin. The actual price of Bitcoin in 2025 could be significantly higher or lower, depending on a myriad of factors, including global economic conditions, technological advancements, and changes in regulatory landscapes. Always approach such predictions with caution and do your own research. Section 8. Bitcoin as a transactional tool. Promise and practicalities. While Bitcoin is often viewed as an investment asset, it's also a revolutionary payment system. Bitcoin transactions are fast, secure, and transparent. They bypass traditional financial intermediaries, reducing costs and increasing efficiency. However, challenges remain for Bitcoin's widespread adoption as a transactional currency. Volatility, scalability issues, and regulatory uncertainties are hurdles that need to be addressed. Additionally, Bitcoin's complexity and the learning curve associated with using it can be a barrier for some. Despite these challenges, Bitcoin's potential as a transactional tool is undeniable. As technology improves and regulations become clearer, we can expect to see greater adoption of Bitcoin for everyday transactions. Section 9. The road ahead. Bitcoin's potential and the future of finance. Bitcoin's journey has just begun. It represents a paradigm shift in finance, challenging the established order and empowering individuals with greater control over their money. As Bitcoin matures, we can expect to see further innovation and integration into various aspects of our lives. From cross-border payments to supply chain management, Bitcoin's blockchain technology has the potential to revolutionize countless industries. The future of finance is decentralized, digital, and driven by innovation. Bitcoin is at the forefront of this revolution, paving the way for a more inclusive and equitable financial system.